I'm Matt Bishar with REIT.com here in Boca Raton, Florida for REITWise 2014. Joining me for this CEO Spotlight is Mitchell Sabshon, CEO of Inland Real Estate Investment Corporation. Mitchell, thanks for joining us.
It's a pleasure, Matt. Thank you very much for having me.
Now, you're a veteran of the public non-listed REIT space, first with Cole and now with Inland.
It's true.
How have you seen the industry change in the last 5 years, both from a company and investor perspective?
The industry has changed dramatically over the past 4 to 5 years. Today, it represents a sector of the capital markets, the commercial real estate finance markets, that no one could have imagined 5 years ago. It's far more mainstream from a source of capital. I believe in 2013, almost $25 billion of equity capital was raised in the public non-listed REIT space, all going into commercial real estate development, acquisition, and finance. In addition, it's become a true incubator for listed REITs. So many of the public non-listed REITs have become listed companies over the past several years or have merged into existing companies. It's also provided a tremendous source for portfolio acquisitions for already listed companies. We've seen just in 2012, 2013, almost $2 billion of acquisitions of public non-listed portfolios by listed companies, and that's in addition to a total of almost $31 billion of M&A activity.
Now, you were brought in to head Inland Real Estate Investments last summer. The company went through some struggles lately, losing what had been its once dominant position in the capital raising market. What are your plans to re-energize the company?
The public non-listed REIT space, as I've just mentioned, has changed dramatically in the past 4 or 5 years. Capital market sophistication has become a focal point. Short-term strategy, long-term strategy, extremely important. The sophistication and knowledge in M&A are all areas that in prior times Inland really didn't have to focus on to the extent that it does today. But the marketplace is far more competitive. The competitors who are in the market today are far more aggressive, and Inland has to be capital market focused. In addition, we're changing things. Traditionally, Inland has focused on one public non-listed REIT at a time. We'll be shifting to a multiple property, multiple strategy format. So in addition to core competencies such as retail and multifamily, we'll also be moving into mortgage REIT area, medical office building, self-storage, and a number of other property types and asset types. We're also implementing a great deal of technology to make our existing operations, which are strong fundamentally, but we're implementing technology to bring better efficiencies, better process. We also have, in addition to our public non-listed REIT business, we have over a 60% market share in the 1031 DST space, the private capital space. And we are bringing a great deal more capital into that business. We did over $500 million of transactions in 2013. We're targeting $1 billion of transactions in 2014. We are on pace for that, and so that is clearly a growth business for Inland. In addition, we're growing our institutional business, separate account business. We recently were awarded a separate account opportunity that with leverage will reach to over $1 billion in retail assets, a very exciting opportunity for us, commingled funds, endowments, family offices, and so we're growing that business as well.
And lastly, I understand you're an avid endurance athlete who's coached a number of people through their first triathlon. How does that mindset help you in your role as CEO?
Actually, it helps me a lot. It's been a great learning tool for me personally. I became involved in endurance athletics for my own reasons. I enjoyed it greatly, but a number of years ago, a dear friend of mine passed away from leukemia, and I partnered with the Leukemia and Lymphoma Society, their team and training program, and I asked a few friends if they would be interested in doing their first triathlon. The first year it ended up being far more than a few friends. I think it was 24 people, and the next year 32 people, and the next year 35 people, and we've raised almost $1 million for leukemia research. And most of those people had never done any endurance athletic event before. And most of them said, I can't do it. I've never done it. I'm a couch potato. Some were 16 years old. Others were 65 years old. But what I found with most people, if you support them, if you inspire them, if you tell them that they can do it, and you do that with confidence, they will reach out and try in circumstances where they might not otherwise had that confidence in themselves. Then, in addition to inspiring them, giving them the resources and the opportunity. And that's what we've done in our endurance program, or triathlon program. And that's what I find from a management perspective is really the job of a manager, to inspire people to reach further than they can, to provide them the resources that they need to do that, and then to give them every opportunity to run, sort of clear the path as a fullback. Let them do what they can do. It applies in endurance athletics, it applies in management, and I've been thrilled to see the results in both cases.
Great. Mitchell, thanks so much for joining us today.
It's my pleasure, Matt. Thank you for having me.
For more on this and other REIT news and analysis, be sure to visit REIT.com.